All right, welcome to The Explainer. Go ahead and take a deep breath, clear your mind, and let's get focused. Today, I'm stepping in as your professional trading mentor. We're diving into a masterclass drawn straight from The Disciplined Trader, Psychology and Risk Management. Now, I know you already follow the markets. You definitely know a candlestick from a line chart. But today, we aren't talking about indicators. We're talking about the reality of the market, the psychological warfare going on in your own head, and the exact, non-negotiable rules that separate the professionals from, well, everybody else. Consider this explainer your ultimate survival guide.
Here's the agenda for our step-by-step guide today. Number 1, why most traders fail. 2, the strict risk limit. 3, conquering the FOMO trap. 4, your daily trade checklist. And finally, number 5, going live safely. Let's get into it.
All right, kicking things off with section 1, why most traders fail.
Look, before we can even talk about winning, we've got to look the harsh reality of the trading world right in the eye. The first major hurdle for anyone in the markets isn't the complex algorithm on the other side of the screen, it's actually your own mind. 90%? That's right, 90% of traders fail. They blow up their accounts, they walk away, and they literally just leave their capital in the hands of the market makers. Okay, we're diving straight into this because, honestly, this isn't meant to scare you. It's meant to wake you up. The stakes are incredibly high. If you don't master your mindset, you're mathematically destined to join that 90%. But our goal today? We're going to give you the playbook to join that elusive 10% who consistently pull profit from the market.
Just think about the stark contrast between these two profiles. First, you have the emotional trader. This is your 90%. They're totally driven by hope and fear. They treat the market like a casino, gambling on gut feelings, and they're just constantly reacting to every single tick of the chart. Honestly, it's a chaotic, exhausting way to trade. But contrast that with the disciplined trader. This is the top 10%. Driven by math, driven by rules. They don't react, they methodically execute a predetermined plan. The truth is, profitable trading is actually quite boring when it's done right. It's not some high-octane blockbuster movie, it's just the quiet execution of probabilities.
Moving right along to section 2, the strict risk limit.
Okay, so this is the absolute core mathematical rule we pulled from the source material. This is literally your psychological armor. It's the one thing that separates the gamblers from the pros. Imagine your entire account balance for a second. Now picture a tiny, almost invisible sliver of that pie representing just 1 to 2%. As a disciplined trader, you have to establish an absolute unbreakable rule. You never, ever risk more than 1 to 2% of your account on a single trade, period. If you have a $10,000 account, you're never risking more than 100 to 200 bucks. Why? Because you're going to go on losing streaks. Every trader does, it's inevitable, but if you only lose 1% per trade, you basically guarantee your long-term survival in the game. You live to trade another day.
So how exactly does this build your profitability? Well, when you measure a small 1% risk against a much larger, say 3% reward, it brilliantly illustrates how tiny, controlled risks lead to totally asymmetrical rewards. If you have the discipline to only risk 1%, but you're aiming for setups that offer a 3% return, guess what? You don't even need to be right most of the time to make money. You can literally lose more than half your trades and still be highly profitable. Why? Simply because your winners are mathematically so much larger than your rigorously controlled losers.
Now for section 3, conquering the FOMO trap.
So you have your risk rules in place, right? But your brain is absolutely going to try and trick you into breaking them. This is the biggest psychological trap in the market. It's the #1 reason new traders abandon that 1% rule and just blow up their accounts. It's breaking out. I have to get in right now or I'll miss it. We have all felt this. Picture it. You're sitting there, watching this massive volatile green candle just rocket upwards. Your pulse spikes, you feel that anxiety bubbling up in your chest. You're seeing these phantom profits just evaporating before your eyes, all because you aren't in the trade. The pressure is screaming at you to just hit that buy button right now at the absolute top just so you can be part of the move. That right there, that is FOMO, and it is completely toxic to your account balance.
When that anxiety hits you, I want you to completely stop and ask yourself this direct question. Are you trading your plan right now, or are you just reacting to your emotions? I mean, if you jump into that massive green candle, where exactly is your stop loss? Are you actually risking 1%, or are you suddenly risking 10% just because you panicked? You've got to step back. A professional mentor will tell you straight up, if you didn't plan the entry, you do not take the trade.
Instead, you have to do this. Just sit on your hands. The market is always going to present another opportunity. Choosing to sit out is actually a required professional skill. Cash is a position. Deciding not to trade when your emotions are spiking is an active, highly disciplined choice. If you miss a breakout, just let it go. The market has been opening and closing for over a century, guys. There's going to be another trade tomorrow, next week, next month. Protecting your capital by literally sitting on your hands is a massive victory.
All right, let's look at Section 4, your daily trade checklist.
So how do we actually put a stop to emotional trading and create real consistency? We do it through strict, methodical journaling. Here's the exact daily logging checklist you need to start implementing. Every single day you log your trades. You write down the entry and exit price. You record the risk size and be honest, making sure it stayed within that strict 1 to 2% limit. You log the specific strategy used, but here's the secret sauce. Pay special attention to tracking your emotional state before the trade. Tracking your psychology is just as vital as tracking the dollars and cents. Were you angry? Did you sleep poorly? Were you feeling that FOMO creeping in? If you write this down every day, I guarantee you'll start to see patterns. You'll realize you lose money when you're frustrated, and you make money when you're calm and methodical. Your journal is basically your mirror.
And finally, Section 5, going live safely.
We really need to prepare you to safely make that jump from the comfort of simulated demo money to the very real psychological warfare of a live trading account. Messing this transition up is where so many traders stumble. So, here are your chronological milestones. Step 1, consistent demo profit. You do not touch real money until your journal actually proves you can execute your rules consistently on a demo account. Once you prove that, then you move to Step 2, micro-position live trading. Look, when real money is on the line, your emotions are going to spike 100 times higher. So you start with tiny, microscopic fractions of a penny. You trade just enough real money to feel that psychological shift, but not enough to actually hurt you. And only after you prove you can stay totally calm with those micro positions do you finally move to Step 3, standard 1 to 2% position sizing. Seriously, do not skip these steps.
So we've covered the harsh reality of that 90% failure rate. We've locked in the strict mathematical armor of the 1 to 2% risk limit. We've talked about how to literally sit on your hands to conquer FOMO, and how to journal your way into a genuinely disciplined mindset. Which brings us right to our final thought. You've got the mentor's playbook now. The rules are crystal clear, and the exact steps are laid out right in front of you. But here's the thing, the market doesn't care what you know. It only cares what you actually execute. So ask yourself, do you have the discipline to actually follow it tomorrow?